Hi everybody, happy Friday Money Wind Up. Today we're going to talk about guarantors. What is a guarantor? A guarantor is someone who wants to help you get a home loan. This could be your parents, grandparents, kids, or siblings. It's normally a family member who already has their own home, with or without an existing home loan on the property. In home lending, a guarantor is generally someone who has a security they can use to support your home loan application, not using their income to support the application, like you would in maybe a car loan or a personal loan. Where a guarantor is used, the loan to value ratio has to be 80% or less over the two properties. So, for example, parents' property might be worth $500,000 with no loan. Your property is worth $500,000. The maximum lending against these two properties is $800,000. Not that you would borrow necessarily $800,000. Normally, it does mean that you can borrow the whole purchase price plus any costs of purchasing. That may even include using a buyer's agent. That could cost. Normally, the guarantor takes a limited guarantee against the guarantor's property, around about 20%. This is to protect the guarantor from the risk of losing their property, which would only happen if you, as the borrower, fail to make your repayments. If you fail to make your repayments, the guarantor gets a notification as well, because it's their danger that's on the property as well. Their property is in danger as well. You would be the only people on the title. The guarantor isn't on the title of your property, but they will get these notifications. If the guarantor already has a loan on their property, they can still use up to 80% of their property value to help you out, sometimes with a small buffer of 5 or 10%. You can also use whatever you have saved to help it along as well. Say you've got $20,000. You may not need to borrow the whole 100% against the guarantor's property. You might only need to borrow 90%. What does it mean for you? You don't need a deposit, or at least only a small deposit, to get what you want. You don't pay lender's mortgage insurance. You can still use the first homeowner's grant if you are building, and you can get into a home sooner. The ultimate plan is to revisit this whole situation in a maximum of 5 years to see if your property's gone up in value, and you can now put the whole loan on your property, effectively releasing your parents' property or guarantor's property sooner. Your guarantor will be required to get independent legal advice, and that's a smart thing. They need to know what they're up for, and they need to understand their responsibilities as well. So if you want to get into a house sooner and your parents may not have cash to help you out, they may have a property that works. Now, if that is an investment property rather than the house they live in, even better. So, if you want to get into your house sooner, maybe it's time to give me a call, or have a look at our website, diamondminehomeloans.com.au, and see what it is you can do for yourself. Happy Friday Money Wind Up, everyone.